Hello, everyone. I hope you're all having a good day, and thank you for joining us for this webinar. My name is Hannah Taylor. I'm the managing editor here at Focus Economics, where we provide analysis and consensus forecasts for 198 countries and 35 commodities, both in our monthly economic intelligence reports and online via our Focus Analytics platform. We work with a network of over 1,200 local and global analysts to produce our consensus forecasts for more than 30 key economic indicators. In this webinar, I'll discuss the economic outlook for Latin America this year. The presentation will cover the outlook for GDP, inflation, and exchange rates. I'll also talk about the key political developments on the horizon this year and provide an overview of the region's major economies. First, let's look at the GDP outlook. Our analysts expect Latin America's economy to grow 1.1% this year, down from 3.5% in 2022. That 2023 figure is weak, both by the region's historical standards and relative to other parts of the world. In fact, Latin America will experience the second slowest growth among emerging market regions, faster only than that of Eastern Europe, which is currently suffering heavily from the war in Ukraine and sanctions on Russia. So what is behind this bleak 2023 outlook? Tight monetary policy will be the key driver. Central bank policy rates are now in double digits in many countries in Latin America and will remain so for much of this year. Plus, our commodities panelists see lower average prices in 2023 for the region's key commodity exports, including copper, iron, oil, and soybeans. Finally, developed economies will slow, dampening external demand. The muted 2023 performance will be widespread across countries, with a few economies even slipping into contraction. But a handful are seen breaking the trend and posting growth above 4%. The Dominican Republic and Panama will be star performers, while Paraguay and Venezuela will also fare well, particularly due to favorable base effects. Risks to the outlook currently appear balanced. An upside risk is China's reopening, which could give a long-lasting boost to commodity prices and external demand. Commodity prices have risen sharply in recent weeks, for instance. On the downside are more aggressive than expected monetary tightening and socio-political unrest. Now let's turn to prices. Regional inflation likely peaked in Q4 and will fall this year due to slowing growth, elevated interest rates, and lower external price pressures. However, inflation in Argentina is expected to continue rising in the coming months due to the wilting currency and de-anchored inflation expectations. This will keep the regional aggregate high by historical standards. Venezuela inflation is also forecast to surge higher into triple figures this year, although we do not include Venezuelan data in the regional calculation. The consensus is for Latin American inflation to end this year close to 16%, far higher than the 11.4% recorded at the end of 2021. However, when Argentina is stripped from the regional calculation, inflation will be a mere 4.5%, compared to 6.5% at the end of 2021. The main upside risks to prices include China's reopening, which, as previously mentioned, has already led to a jump in commodity prices, and currency weakness linked to socio-political unrest or aggressive Federal Reserve rate hikes. Further rate hikes by Latin American central banks pose a downside risk to prices, while our analysts currently see regional rates peaking this quarter and dropping by year-end. This picture could quickly change. The weighted average regional exchange rate is seen weakening overall this year, chiefly due to depreciations in Argentina, Chile, Mexico, and Peru. In contrast, the currencies of Brazil and Colombia are seen gaining ground. However, the region will be vulnerable to changes in risk sentiment due to a persistent current account deficit and investors' concerns over the policy direction in several countries. Colombia was a prime example last year. The peso fell to record lows due to fears that President Petro could implement a tax on capital outflows and phase out fossil fuel exports. There are several key political events on the horizon this year. In Paraguay, elections in April will see the center-right ruling party face off against a broad-based coalition encompassing parties ranging from the left to the center-right of the political spectrum. The incumbent government is likely to remain in power for another term. Regardless of the victor, Paraguay's economy will continue to be closely tied to the economic health of its two giant neighbors, Argentina and Brazil, as well as to extreme weather events, given that soybeans and hydroelectric power are the country's key exports. Elections will be held in Guatemala in June, with a right-of-center candidate likely to become the next president, as has been the case in recent elections. However, parliament will remain highly fragmented, which will hinder policymaking. The rule of law and democratic freedoms, which have deteriorated under the current president, will be important to watch in the lead up to the vote and after it concludes. Argentina is the last country scheduled to hold elections this year. Given that inflation is close to triple figures and economic stagnation is expected ahead, the right-wing opposition has a good chance of retaking power. This would likely entail a more market-oriented economic policy than under the current Peronist administration. However, as former President Macri learned the hard way, removing many years of economic distortions will be hard. Factors such as ingrained high inflation expectations, a lack of faith in the peso, limited fiscal room for maneuver, vulnerability to global investor sentiment, and social discontent could all frustrate the next administration's plans. Next, a referendum on a new constitution in Chile is expected in late 2023. Given Parliament's greater oversight of the content of the text and the bruising referendum defeat on a radical constitutional proposal last year, the new constitution is likely to be moderate on the economic front. However, it will still put greater emphasis on the environment and the government's provision of social services relative to the current constitution. Turning to Peru, Parliament took steps earlier this year to move general elections forward to 2024. However, elections could potentially be held even sooner if social unrest persists. The resignation of President Boluarte, which is a key demand of protesters, is also on the table. Even if elections are held this year or the presidency changes hands, chronic instability will remain a feature of Peruvian politics due to its dysfunctional political system, which will continue to weigh on investment in turn. The final event to watch is possible foreign intervention in Haiti. The country has been on a downward spiral since President Moise was assassinated in July 2021, with gangs now controlling swaths of the capital, immigration on the rise, inflation surging, and no democratically elected officials remaining in office. A foreign intervention could temporarily restore a veneer of calm, but the country's underlying economic and political problems will persist. Haiti will likely remain the poorest country on the continent over our forecast horizon to 2027. Now, let's examine the outlook for the region's three major economies, which together account for over 2/3 of regional GDP. We'll start with Argentina, where GDP is forecast to grow a mere 0.1% this year, among the worst performances on the continent. Interest rates of over 70%, excruciatingly high inflation, a collapsing peso, and a lack of business-friendly policies will all weigh on activity. A key factor to watch will be compliance with the $44 billion IMF bailout package. For now, the government is attempting to meet the conditions of the package, although spending pressures ahead of the October elections could raise tensions with the fund. As previously covered, the outcome of the elections will be crucial to the direction of future policymaking. A further factor to watch is crop damage due to drought, as recent rainfall has been the scarcest in decades. Corn and soybeans are by far the country's leading exports and are important for fiscal revenue. Therefore, a weak harvest would put pressure on the budget and dampen the external sector. Next, let's look at Brazil, where our analysts forecast a mere 0.8% economic expansion this year, below the regional average. Double-digit interest rates and the fading of the post-pandemic boost to services will drag on activity. An important determinant of the outlook will be extra fiscal spending under new President Lula, as Lula has signaled his intention to loosen budget rules and increase social welfare spending. If investors believe the new administration is overly spendthrift, this could drive capital outflows and force the central bank to hike rates to protect the currency. Further social unrest caused by Bolsonaro supporters who stormed government offices in January will also be important to watch. Finally, let's turn to Mexico. Although the economy has outperformed expectations recently, it will still slow this year due to tight financial conditions and weaker growth in the US, which is by far Mexico's largest trading partner. The extent of the US downturn, which is currently forecast to be mild, is the key risk to Mexico's outlook. Another cloud on the horizon is a disagreement with the US and Canada over domestic energy reforms. Mexico could be on the hook for tens of billions of dollars in tariffs if the dispute goes unresolved. More positively, the country should benefit from nearshoring by firms looking to diversify away from China and secure easy access to the US market, although the Mexican president's ambivalent attitude to private enterprise will limit such gains. That brings us to the end of the webinar. I just wanted to wrap up with our bottom line for the Latin American economy. In 2023, economic activity growth will slow sharply, inflation will decline in most countries, the monetary tightening cycle will peak, and regional currencies should weaken on average against the dollar. General elections in Paraguay, Guatemala, and Argentina, a constitutional referendum in Chile, potential snap elections in Peru, and possible international intervention in Haiti are key political events to watch. Thank you for listening, and I hope you've enjoyed this webinar. I've been Hannah Taylor, Managing Editor at Focus Economics, and I hope you have a great day.